What is going on, my friends? Ryan Williams here, back with another one, and in today's video, I am going to be answering your dividend stock investing questions. That's right, guys. Recently, I put out a community post asking you guys to submit questions for this video, and I got a lot of great responses. In fact, I got so many questions commented back that I will not be able to fit them all in this video, so I sincerely apologize for that. At any rate, this video is going to be a lot of fun. I am so stoked to get into it with you guys, and I want to thank you guys all for submitting your questions. This video would not be possible without you. And before we get rocking and rolling, if you guys are excited to hear about some dividend stocks today, please go ahead and give this video a big thumbs up. And also, as we make our way through the video, if you find that you're enjoying the content and are not already subscribed to my channel, I would ask you to please consider hitting that subscribe button so you can stay up to date on all the future videos I have coming out. On this channel, I strictly talk about dividend stocks. I upload 2 videos every single week, one on Wednesdays and one on Sundays. So there is a lot of good content guaranteed to be coming your way. So consider hitting that subscribe button so you don't miss a beat. Anyway, thank you so much for doing that. You guys are awesome. And now, without further ado, let's get into it. All right, guys, now getting right into it, let's just dive right into the very first question, which is, historically, what dividend stock or sector performs well in the fourth quarter? Additionally, what dividend stocks would be good to invest in with rising inflation concerns? All right, so great question. That's a really fun one to start off with. And to answer that, I would say, at least as far as stocks that perform well in the fourth quarter, I would try and think about what is going on in these months and what stocks would be relevant to whatever's going on. So let's take it month by month. Let's start with October. What big things are going on in October? It's the beginning of fall, and we also have Halloween. So as far as fall goes, what's really popular, okay, come this time of year? The first one that comes to mind, guys, is Starbucks, okay? Those seasonal drinks, people look forward to them all year. People go nuts for their pumpkin spice lattes, including myself. That is one stock that I would look to for the fourth quarter. But also, at the end of October, we have Halloween, and there's one company that really sticks out and comes to mind for that specific holiday, and that is Hershey's, ticker symbol HSY. Now, guys, I'm not guaranteeing these stocks are going to perform really well or that Halloween's going to make the share price of Hershey's just skyrocket or the pumpkin spice lattes for Starbucks make it skyrocket. These are just things that I'm thinking about that are relevant to what's going on this time of year. Anyway, let's move into the next month, which is November. What is going on in November? We have Thanksgiving. That's a really big holiday, outright, but I can't really think of any stocks off the top of my head that would be relevant to Thanksgiving exactly, but I do know, okay, come November 1st, as soon as we're through with Halloween, people are already getting going with Christmas shopping. You know, they've already got the Christmas decorations out. First thing, November 1st. So as soon as people get into that Christmas mode, start doing their Christmas shopping, maybe look at any stock in the consumer discretionary sector or even just the retail industry in general. And for those guys, a few that come to mind are Best Buy, ticker symbol BBY, which actually is down almost 7% in the last month. All right, maybe think about Target, ticker symbol TGT, which is down almost 6% in the last month. Okay, if we're thinking about Target, we can also include Walmart, ticker symbol WMT, which is down over 4% in the last month. And then also one other one that I'm not too familiar with, but could be a good one for Christmas and Christmas shoppers is Dick's Sporting Goods, ticker symbol DKS, which is down over 8% in the last month, which is wild. And last but not least, another great retail stock is Macy's, ticker symbol M, which is actually up about 7.5% in the last month and up just a tad bit more, not too much more here in 1 year's time. Obviously, I'm joking, guys. Macy's has performed really well in the last year, as you guys can see here. And then as we move into December, finish out the year, you know, maybe the same approach as November. I would think that those same discretionary stocks or those same retail stocks would do pretty good in November and December. And then as far as stocks that would be good to invest in with rising inflation concerns, the way I'm kind of thinking about it is which stocks or which companies are providing goods and services that people just, they cannot live without. They can't go without. Goods and services that even if the price does increase, they still have to get them, they still have to buy them. And for that, guys, the first sector that comes to mind in general is consumer staples, okay? People cannot go without them, that's why they're called staples. And 2 stocks within that sector that would be pretty safe bets and actually are always pretty safe bets is Procter & Gamble, ticker symbol PG, and Kimberly-Clark, ticker symbol KMB. Also too, I'd be curious to know your guys' thoughts on this, but do you think that you can make a case for the energy sector and the utility sector being good sectors to invest in with rising inflation concerns? I would actually be curious to hear what you guys think about that in the comments below. All right, guys, now moving on to question number 2. In the long run, is super concentrated heavy on 4 stocks better than 30 plus? It's hard to keep track of 30 plus, but I can name everything about 4, who the management are, their 5-year trajectory, etc., etc. Okay, so essentially the question here, guys, is it better to be less diversified and just know these companies like the back of your hand? Or in the long run, is it better to spread your investments out across more companies, be more diversified, even if that comes at the expense of not knowing as much about each of those individual companies? And that's a really good question. I think the answer to this question can be partly preferential, but over the long run, if you are making a conscious effort to build your portfolio, which if you are across 20, 30, 40, 50 plus years, you can imagine that portfolio is going to become a pretty substantial size. And if it was me, I would be pretty concerned having hundreds of thousands of dollars, if not millions of dollars, if depending on how much you're investing. I would be pretty concerned about having that much money just into 4 or 5 or less than 10 stocks. I personally would want to be more diversified than that. And kind of the approach I would take is this. So knowing 4 stocks like the back of your hand that's a great place to start. But if it was me, over time, I would work on building out my portfolio, adding more stocks one by one by one by one. And by doing so, by slowly increasing the diversification of your portfolio, just stock by stock, one at a time, I think you can maintain that familiarity with the stocks that are in your portfolio. That's just my take. And once again, guys, remember this can be preferential. Like I personally have 20 stocks in my portfolio, but I know people out there who have 50 or 60 or 70 plus stocks in their portfolio. And that works for them. But for me, I'm like, gosh, that's just too much. I would rather be more concentrated on less stocks, but it depends. Like I think there's a sweet spot and a certain amount of diversification that fits with the size of your portfolio. I think if you have a smaller size portfolio, you can get away with having less diversification. But I think as your portfolio grows in size, I think so should the number of holdings just in general. That's my take on it. All right, that was a great question. Now moving on to question number 3, guys. What are the tax-related implications of REITs and MLPs, both in a regular taxable account and in a tax advantage account like a Roth IRA? Not fully understanding this has kept me from investing in these types of stocks over the last decade. Honestly, that's a great question. The answer to that question can be complicated. And before I even answer that, please keep in mind, everyone watching, I am definitely not a tax professional. In fact, I would say that the tax side of things is the area that I'm probably the least familiar with as it pertains to dividend stocks. So I may not be the right person to be asking this question to, but nonetheless, I will give it my best shot and try to answer it. But I would still, number 1, do your own research, but number 2, consult a tax professional, which, like I said, is not me. So let's start with REITs, guys. So if you have a REIT, which is a real estate investment trust in a taxable account, it is going to pay you an ordinary dividend. So there's qualified dividends and ordinary dividends, which are taxed at different rates. Qualified dividends are taxed at a lesser rate than ordinary dividends. So when you have REITs in a taxable account, you're going to be paying that higher tax rate when you get those dividends every year. And this begs the question, okay, well, how much are you going to be taxed? And as you guys can see on the screen here, this is the regular income tax REIT. So from these ordinary dividends, you could be paying anywhere from 10 to 37%, depending on how much you make if they're kept in a taxable account. Now, if you hold REITs in a Roth IRA, they should be tax-free, so you should not have to pay any income tax on the dividends you receive from REITs in a Roth IRA. That's what I understand about it so far, but once again, I'm not the right person to ask. And moving on, let's talk about MLPs, which are master limited partnerships. These are companies like EPD, which is a big one I have in my portfolio. The income you receive from these MLPs is pretty similar to dividends, but it's actually looked at as a tax standpoint as a return of capital. And because of that, you shouldn't have to pay any taxes on the income you receive until you sell your position. And this is if you hold these MLPs in a taxable account. So in a taxable account, you shouldn't have to pay any income tax on the dividends or the return of capital that you get from these MLPs. And I know that was a very quick way to answer a pretty complicated question, but that is the general gist of it, guys, as far as I understand it and from the research and reading that I've done. But once again, you guys definitely look into it for yourselves. You know, hit up an accountant or a CPA or something like that. They'll definitely point you in the right direction and probably explain it a little bit better than I have here. All right, moving on to question number 4. What do you think of small and mid-cap companies in the context of dividends? Most people like the aristocrats and kings, but those tend to be the ones that have the fairest prices for that very reason. Too many eyes on those companies. Are small and mid-cap companies overlooked by dividend investors? I have my thoughts, but it would be great to have yours as well. It's funny, when I first read this question, it made me realize that, I personally really don't think about small or mid-cap companies. Pretty much my entire portfolio, except for 2 or 3 stocks in there, is comprised of strictly large cap blue chip companies like the Johnson & Johnsons, the 3Ms, the Altria Groups, the Starbucks, a lot of the stocks that everyone knows and the ones that are most commonly talked about. So with that said, to actually answer this question, I do think it's possible that a lot of the small and mid-cap stock companies can be overlooked by many dividend investors. And I think that is for a couple reasons. I mean, number one, a lot of the big blue chip companies like the ones I just named, those are ones that are obviously most commonly talked about by people on Seeking Alpha or on the internet or even here on YouTube. And so because of that, I think people are just used to hearing about only those bigger companies and then go and build out their portfolios mainly with those types of companies. I would imagine, and I can't say this for certain because I don't know, but I would imagine that most dividend investors don't cross the small and mid-cap bridge until they get deep into dividend investing and or spend a lot of time really researching dividend stocks and really digging to find new companies, which I can say I don't do on a daily basis. I don't do a ton of stock research on a daily basis. I think there's a lot of dividend investors out there who buy the stocks they have and they do so because they don't want to think about it too much. They want ones that are going to help them sleep well at night and rest easy. And that might be another reason that the small and mid-cap companies are maybe more overlooked, is maybe because they come with more volatility or aren't as stable and set up and secure as a lot of the bigger blue chip companies, and therefore maybe aren't seen as reliable. So that could be another reason that people overlook those small and mid-cap companies. And I know I'm kind of rambling on this a little bit, so I apologize for that, but keep in mind, this is not to say that small and mid-cap companies are bad investments. There are some good ones out there that could be worth investing, and I actually have a couple examples here. The first of which being Casey's General Store, ticker symbol CASY. I haven't done a ton of research on this, but from looking at it just a little bit, going to the dividend stats, the dividend yield is pretty low on this company, but I was actually surprised to see that it has a pretty solid dividend growth history of 22 consecutive years. And then moving on, guys, another one which is down actually 8% in the last month is Scott's Miracle-Gro, ticker symbol SMG. This one has a 1.78% dividend yield and 12 years of consecutive dividend growth. And aside from that, the payout ratio is in a good spot. Okay, the 5-year growth rate is not too terribly low. So looking at this, at least from the dividend stats, it doesn't look to be too terrible of an investment. So the point I'm trying to make here with these examples, guys, is there are some good small and mid-cap companies out there. You might just have to dig a little bit deeper to find them if you want. Joel, hopefully that answers your question, man. And I actually know one other smaller mid-cap. I don't know what the market cap is. I know one that you like is Lazy Boy that we've talked about, ticker symbol LZB. So for you guys watching this, if you are maybe in the market or want to, dive a little deeper into some lesser known stocks, look to companies like Lazy Boy, Casey's General Stores, and maybe Scott's Miracle-Gro, and from there, you might be surprised at some of the good small and mid-cap stocks you can find. All right, moving on to question number 5. I love this question. How does being in the red affect the stock dividends? So I think what this person is trying to ask is, how does like a negative share price performance affect the stock dividends? And the short answer is it really doesn't. The share price isn't really tied to the fundamentals of the business in most cases, and it's also not tied to the dividend at all either. So the performance of the dividend and the growth of the dividend can act independently of whatever the share price is doing. In fact, for a lot of dividend investors, it can be looked at as a good thing if the share price of the stocks you own go down, especially if it doesn't change the amount of dividends you get. You're able to buy more for less money. So as an example, if you have a stock paying $10 a year in dividends and it's $10 per share, that means you have to pay $10 to get $10. But then, and I know these numbers are wacky, just bear with me. But anyway, then if that share price drops down to $5 per share, you're still getting that $10 in dividends, but instead of having to pay $10 for it, you can now get it for $5. So anyway, in a nutshell, that's how being in the red can affect the stock dividends. It can be looked at as a good thing. All right, now moving on to question number 6. Is it worth having an ETF that has an expense ratio if you are also investing into individual stocks that are in the ETF? So that's a great question. If you own an ETF and then own some of the individual stocks just on the side that are also in the ETF, does it even make owning the ETF worth it? Honestly, I think it really depends. And off the top of my head, in my opinion, I think what is going to determine if it's worth it or not is how much allocation you give to the ETF. So for example, if your portfolio is 95% individual stocks and then 5% ETFs, I don't know that it would necessarily be worth it to have the ETF with such a low allocation. Because for a lot of people, the reason to own ETFs is number one, to not have to think about buying individual stocks, but number two, to create a large amount of diversification and mitigate your volatility. But if you have a low allocation of ETFs, then it doesn't really do much in terms of reducing volatility. But then the inverse of that, let's say the bulk of your portfolio is made up of ETFs. Let's say 60% or 70% of your portfolio is in one ETF, which, has maybe 400 different stocks in it. And then you have 30% individual stocks, some of which are in that ETF. I don't think that's harming anything personally. And let's look at a specific example real quick to try and explain this a little bit better. So if you take VYM, which is the Vanguard High Dividend ETF, you guys can see here that the top 10 holdings are some companies that you have definitely heard of. JP Morgan, Johnson & Johnson, Home Depot, the list goes on and on. A lot of recognizable dividend companies. But then if you look at the bottom of that screenshot, you can see that the ETF in total has 413 different holdings, so it's pretty diverse. So in this example, guys, let's say in your portfolio you have 50% of it in VYM, and then, some of the other individual stocks you have are like JP Morgan, Johnson & Johnson, Home Depot. Let's say you have some actual positions in that. Would it be worth it to even have VYM if you had those other stocks? Well, I would think yes, because a big portion of your portfolio is invested into those 413 stocks. And then by investing into those, individual ones on top of that, you're just increasing the allocation of those individual stocks just a little bit. But still, overall, you're pretty diversified or maintaining a lot of diversification because you are mostly invested into that ETF. So I still think it can be worth it. But then again, if you only have like a little bit of VYM, 5% of your portfolio, then I don't know. I personally would rather just put the rest in some of those individual stocks. That's just my take, guys, and as is the case with a lot of things regarding dividend investing, it can be preferential and just depends what you like and how you want to build and craft your portfolio. Everyone does things differently. This is just my take on it. All right, guys, moving on to question number 7. What are the best dividend stocks to invest in for beginners? That is a great question, and I think that there can be multiple answers with this. You guys might have a different opinion than I do on this, but my take is the best stocks to invest in for beginners are ones that I think will both keep you interested in investing in them, keep you in the game and keep you contributing, and also ones that can be looked at as reliable investments. And let me just give you an example real quick. So let's say that you are someone who spends a lot of time shopping at Target, okay? Maybe you get your groceries there, you go there for odds and ends, you just love browsing at Target, but you want to get into investing. Well, because you spend so much time at Target, you might consider that one as a stock to invest in because you're already interested in going there. You already spend money and time there. It's something that you enjoy. And by investing in a company like Target, like that you use often and it's a part of your life, it might be one that gets you excited about investing. That's just my take. But then again, how do you determine that a stock like that's going to be a good investment? Yeah, you may like it, but who's to say what's a good investment and what's not? Especially as someone who is just getting into dividend investing, you don't know a lot about this stuff yet. You don't know the PE ratios and the payout ratios and what a good 5-year growth rate is. So how can you determine if Target is a good stock to invest in? Well, guys, at the most basic level, the easiest thing you can do, I think, if you're getting into dividend investing is look at the dividend growth history. In my opinion, I think that is a very good first thing to look at for dividend investors, and it should be pretty easy to determine if a stock could be a good investment or not. Because even the most basic investor, someone just getting into it, can look at a dividend growth history and say, okay, the longer amount of time a company has been growing and paying their dividend is probably better than a company that has not been growing their dividend at all. With Target's example, you can do just like a minute of research, go onto Seeking Alpha, type in Target, go over to the dividend page and see that it has 53 years of consecutive dividend growth. You can see that and say, okay, 53 years of growth, that's like twice as long as I've been alive. So, that seems to be a pretty reliable dividend. It seems like they know what they're doing with the dividend if they're able to pay it and grow it for 53 straight years. So I think that going about it that way would be a good way to choose which stocks you're going to be investing in as a beginner. If you're just getting started choosing your first few stocks, I would think that it would be good to choose ones that you're interested in that are going to get you excited about investing. In my case, guys, the first couple of stocks that did that for me and really got me interested in investing in them is Starbucks, number one. I love coffee. I love Starbucks, and I love the idea of investing in a company that I'm really interested in and actually get to use and see and drive by in my own daily life. Every time I drive by Starbucks or have the coffee, I'm reminded of the stock and I just get excited about it. And another one that did it for me, it was another one of my first dividend investments, was Coca-Cola, ticker symbol KO. Okay, now I'm not the biggest soda drinker, but getting into it, I knew Coca-Cola is a company that's been around forever. Okay, it's an iconic company, an iconic worldwide company. And you know, from looking at the dividend history of that stock, I saw, okay, it's got like, what is it, like 59 years of consecutive dividend growth. So I was like, yeah, that could be a good investment. And that's how I personally went about choosing my very first few stocks as a beginner dividend investor. And it's worked out pretty well for me so far. Those are both companies that I still have in my own portfolio today. They're ones that I plan on holding as long as I can. I love both of them. Anyway, guys, that pretty much wraps it up for this very special video, this first dividend investing Q&A. I want to thank you guys once again for submitting all of your questions and also sticking around with me till the end if you are still here with me. Before you click off to the next video, if you have not done so already, I'll ask you to please hit that like button, hit that thumbs up, and also consider subscribing to my channel. I would love to have all of you guys along for my dividend investing journey. Also, last thing, leave me a comment below. Let me know what are some of your takes on the questions that we covered in this video. How would you choose your first few dividend stocks as a beginner investor? What do you think about dividend ETFs? Are they even worth it if you have those individual stocks? In your opinion, what are some good stocks to invest in this quarter? And also, what are some good stocks to invest in for rising inflation concerns? Let me know all of these things in the comments below. And with that said, guys, I will now get out of your hair. But thank you once again so much for watching. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.